If I had to build an investment portfolio from scratch with no background and no idea where to start, this is exactly how I would use AI to walk you through it. So, in this video, I'm not just talking about theory. I'm actually going to show you how to go from zero to a real portfolio step by step. That means picking the right type of investment account, understanding what to invest in based on your goals, using AI to compare ETFs and build a sample allocation, and walking through the actual process of setting up an account and making your first investment. This isn't about stock tips or shortcuts, it's about using smart tools to get clarity, take action, and build something sustainable. So, if investing has ever felt overwhelming, this should make it feel a lot more doable. All right, we're going to go through those steps exactly like I said them. So, what I'm going to do is provide all the background I can. I'm just going to say, assume I have no investing knowledge and have never invested before, explain how I can get started as a 26-year-old in the United States. I'm being specific because I am making sure that it gives me United States-based information. I just know ChatGPT usually pulls from your history, and sometimes it thinks I'm Canadian. So, I want to be very clear about that. So, it's telling me step number one is to understand why I'm investing and making sure that I'm not just keeping money in a savings account. Step two, it wants to make sure that I'm ready. So it's saying before I even start investing, I need to make sure that I'm saving 3 to 6 months of expenses in a high yield savings account. I have no high interest debt and I have some income stability. So let's assume I do check all of those boxes. That's great. Step three, it's telling me what type of accounts I should open. So it's saying there's 3 different types of accounts. And it's saying if I'm new and I want to start small and always have access to my money at any time, I should go with a brokerage account. And if I'm ready to invest for retirement, I should start with a Roth IRA. So I know from experience, a Roth IRA is the most powerful account that you can use for retirement because it grows tax free in America and you can invest up to $7,000 a year in that account. Everybody, I think, should have one of those accounts. But as it said, if this is something that you're very new to and you're super not comfortable with the concept of your money kind of being locked up, then a brokerage account is great. It just has no tax benefits and you will have to pay taxes on your gains. Step four is to pick a platform or a broker. So it's saying there's a bunch of different apps that I could use: Fidelity, Charles Schwab, Vanguard, Public SoFi, Robinhood, and it's giving me a little bit of a summary about each of those accounts. This one, Fidelity, says it's beginner free and there's no fees. So that's the one it's kind of pushing me to. Step five, pick what I'm investing in, and it's telling me I can invest in exposure to the whole market using the S&P 500, or I can do a target date fund, which is automatically balancing risk for my age. So this is a great option if all you're doing in investing is planning to retire. Then you can pick something very specifically of, I think I want to retire in 40 years, which is what it's given me here. So the Vanguard Target Retirement 2065 Fund. So it's 2025, so 40 years from now it's 2065, and it's going to balance it based on risk. So right now, because that's 40 years away, this fund would be very risky. So it'd be in a lot of individual stocks. There probably wouldn't be a lot of bonds in it. And then as time progresses, Vanguard will automatically rebalance that for me and become more stable. So it's less likely that I lose any money in a downturn or if a business has a bad quarter or bad earnings. And then step six, it's saying, is to automate it. So set up auto transfers and make sure that I'm reinvesting automatically. And it's saying consistency is more important than the amount. Then I need to let it grow and it's telling me to walk through it. So that was a lot in terms of actual actionable things that I need to do. Step one, don't. Step two is good. Step three, picking an account. So this is a great time. If I had questions about it, I could ask, why would I not open a Roth if I want to access my money before retirement? So all it said is something to do with growth tax free with a Roth. And it's saying that a brokerage account is better, but I don't really understand why. So it's saying that withdrawals are limited, but I will incur a penalty if I take out any of the growth before I'm 59 and a half. So I can withdraw my original contributions at any time. So that $7,000 a year, I can pull that out. But if I take out any of the gains, I will get a penalty on it. And then it's giving me the practicality of that and what I should do instead. So now I understand exactly why it's saying I should choose a Roth only if I'm not going to take that money out. But how do the taxes work on a brokerage account? Because they're just saying no taxes, no tax benefits. Okay, so now it's explaining to me what capital gains tax is and how much it's going to cost me to sell things. So there's short-term gains and long-term gains, and it gives me an example of how long-term capital gains tax works. Depending depending on my income. So I don't pay tax on unrealized gains. So stocks that are going up and not sold, I don't pay taxes on. How do I know what taxes I pay for long-term gains? It just gave me 3 different options of how much I pay. So basically, it's saying that if my taxable income is $47,000, my capital gains tax rate is 0%. If it's 47,000 to 518,000, it's 15%, and over that it's 20. And it's telling me what counts as taxable income is my salary, freelancer side hustles, rental income, all that kind of stuff. So if you make over $47,000 at your job, if you sell a stock that's in a brokerage account and it made money, you have to pay 15% taxes on the amount of money you made. There, I've gotten a little bit of an explanation of what it is and understanding of a brokerage account versus a Roth account. So then I'm going to go back to this, and I think the best account to start with for me is a Roth IRA because I know I want to retire one day and I'm okay not having access to this money. Picking a platform. So it's saying Fidelity is beginner free and no fees. So I would just go through Fidelity in order to set up an account. I'm just going to Google Fidelity Roth IRA and I'm going to click in, and it's going to be the first one because they pay a lot of money and they want you to open accounts. So they pay for SEO. Then I have the option to choose and manage my own investments or have Fidelity choose and manage my investments. So I don't really know. When I went to the Fidelity website, it gave me the option of, do I want to open a Roth IRA and have Fidelity manage it, or do I want to manage it myself? They're asking, do I want to pick what I invest in, or do I want Fidelity to pick for me? And it gives me the 2 options and it tells me what things cost. So they have a robot advisor is what it says, and they'll charge me a small management fee. Under $25,000 of assets, it's free, and over that, it is 0.35%. Since you're just starting out and I want to learn, I should manage myself and buy something simple. Great. Then I will go back and I will choose and manage my own investments. And it's going to ask me some super basic questions to open an account. And then you would have to put in all of your details, tell them where you live. I'm not going to go past this because I personally don't actually need a new account, but this is how easy it is to set up. And you just go through and give them all your information, and then they will create an account for you. Great. So let's say I do in fact now have my Fidelity account. So I would say I opened my Fidelity Roth IRA and I don't know how to use the website. There's buttons everywhere. There's so much going on. I have no idea how to use it. So I'm saying, how do I go and do it? And it's going to tell me exactly what to do, what I'm looking for on the menu, what I'm clicking, how I'm transferring, how I'm moving things between accounts, and the contribution details. So it's going through step by step with me and telling me what to do. And it's going so far as to show me how to invest that contribution. So say I have $1,000 in my checking account that I want to move into my Roth IRA that I've opened with Fidelity. So steps 1 to 5 that it just showed me is exactly how to do that. So I move the money in, and it's saying it's going to take a couple of business days to be able to invest. But now the cash is in there, and it's saying I can go once again into the toolbar and hit trade, go through, select my account, and enter a ticker to buy or invest. And then it's also giving me the opportunity to automate my contributions. So the ticker it's giving me right now is this, which is Fidelity's S&P 500 fund, and then it will become a position in my investment account. But why doesn't any of this cost money? Everything costs money, so it feels very strange to me that I get to just do all of this for free. So it's saying I'm not paying an account fee or annual maintenance, and I'm paying no commissions on US stocks. But what might cost me is mutual funds and ETFs that have an expense ratio. These funds are being managed by somebody who works at Fidelity, basically, or some other fund that has an ETF or a mutual fund, and they take a little bit of money off of the top from you, and it's kind of just baked into the amount that you're buying. And it's going so far as to tell me what Redditors say about it. So it's saying the biggest thing I need to watch out for is fund expense ratios, so the annual cost inside the fund. So I'm asking how I can do this with no expense ratio, and they're saying Fidelity can do it. So there is a total market index fund, which is just how the market is generally performing, and it costs nothing. So that would probably be one of the first things I would consider investing in. And it covers the US market as well as the international market under a different fund. So there I have 2 options. Theoretically, right now, I have gone through, figured out what account I want. I've opened a Fidelity account. I'm self-directing on that account. I figured out how to put money into the account. And now I'm figuring out what stocks to invest in. And ChatGPT has already told me how I go through on the Fidelity website and go and navigate through its menus in order to pick these stocks. So that is it. And this I kept super simple. We are technically only allocating to one thing, total market. I think that's a great way to start investing. It's really important to just learn how the systems work, learn how to contribute money, and maybe start auto investing before you differentiate your stocks or move to single stocks as opposed to ETFs. I think your allocation at the start should just be one thing. That's a total market fund that is a very low fee. And from there, you can find more resources and information. You can ask ChatGPT to give you more resources and information, and then you can develop an investing strategy that works for you. That is how I would use AI to get started if I was starting from nothing. And thank you for watching.